Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guests today are David Morgan from the Morgan Report and Tom Power, President and CEO of the Sunshine Mint. Welcome to Wall Street Silver.
Good morning.
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 So, David, we want to thank you and Tom for joining us. David was very wonderfully set up this meeting, this Zoom call with Tom Power, so that we could go over what the Sunshine Mint is. One of the biggest suppliers of blanks to the U.S. government for the American Silver Eagle and other silver coins that the U.S. Mint produces. So thank you, David. David, I'm going to give you the first question for Tom to kick this thing off.
Okay, great. Just a little background. Tom and I have known each other for more than a decade for sure. And I've been over to the Coeur d'Alene facility 3, 4, 5 times. In fact, Tom, you may recall the first time I went there was to audit Bernard von Nothhaus's supply. So that's on the record for giggles.
I hate to say that, David, that's more than 2 decades ago.
Okay, there we go. So very graciously always, did the check on me, and I got to go through the whole process. I've done that probably 3 times in Idaho, but recently I was speaking at a one-to-one conference in Las Vegas, and I asked ahead of time, could I please go through the facility in Las Vegas, which is a bigger, broader matter than even the Idaho facility, and quite interesting. It's always good to see the process again. So I did sign the NDA. I know there's a few things I can't say, but I kind of want to get the record straight on what's going on since you are a supplier to the U.S. Mint. So can you go from kind of like the illness onward of what kind of changes you've seen, not only in Sunshine Minting, but the industry at large?
You know, we've been a supplier to the U.S. government. Well, since basically I've been in the U.S. for 25 plus years from Sunshine Minting. And so we've seen a number of the different cycles. It seems to be about every 4 or 5 years we go through these challenges with shortages of blanks. The cycles have different reasons but it really comes down to economics 101 and business 101. It's supply chain issues, demand issues. In the most recent past, what we saw was, in 15, 16, even 14, it was a very steady demand. It was growing. They started breaking records. They were doing like 30 million, 35 million, 38 million, 42 million. This is published numbers, so I'm not talking out of school here. And then you see in 2018, 2019, the demand was less than half of what they had been typically supplying. So, the challenge for us as a supplier, as a manufacturers, how do you predict that? How do you plan for that? And there really is no way to plan for it. The forces, believe it or not, a lot of what we do is driven by, geopolitical forces. So I call what happened in 17, 18, 19, the Trump factor, because, the President Trump was in, obviously the equity markets were strong, the economy was strong, inflation was super low. And people tended to shy away from the safe haven assets like silver and gold, and everybody was in the equity markets, real estate, and so therefore the demand for this product really abated during that time. Left us in a very difficult position because we had built our capacities up to supply at such a high level, and all of a sudden the demand is down here. So, for me as the CEO of the company is, how do we mitigate that risk moving forward? So, we had also acquired that facility that you were talking about, David, in Henderson in 2018, anticipating continued growth, continued, the need for supply, and then it went away. So it was there was a couple of challenging years for us trying to really renavigate the markets. And so for us, it was really about diversifying our customer base. We're not a one-trick pony. We do have other customers. So we really had to mitigate the risk by us personally reallocating our resources to other places so that if the market turned again, we're not left, with this big basket with nothing in it, sort of thing.
So explain, David sort of briefly described this to me, but I'd love to hear it from you. The standards, when you create one of those silver blanks for what will eventually become an American Silver Eagle, the specifications are extremely strict. It's like it has to be within 0.00 something one of an ounce in order, otherwise it gets automatically rejected by the U.S. Mint.
Yeah.
And so I'd love, and I've heard, and you can confirm or deny or whatever you think the rumor mill is. While Sunshine Mint has this all dialed in and it's working well with when you do it, some of the other suppliers are having difficulty reaching those exact specifications required by the U.S. Mint. Is that where part of the problem is?
I've been a supplier to the U.S. government, even in my previous life before I came to Sunshine Minting. I worked for Johnson Matthey up in Canada. And so over 30 years I have supplying to the U.S. government. The nature of the specifications of their product has not changed in 30 years. They've always had a very high bar because they need to have product that they can put in investors' hands with 100% absolute faith that it's a 1 ounce product that has a minimum of 1 ounce of silver, 3 nines guaranteed, 4 nines if it's, or whatever the alloy is. So the specifications haven't changed. There's some other physical properties that do make them very challenging to make, because the U.S. Mint uses the same blank and the same product to make the proof product versus the standard Silver Eagle bullion. So they have set up a system so that they want to just be able to, if they're running 1 million or 750,000, 2023 proofs, they can just pull that out of inventory and make it without having to make a special run or anything like that. So the quality specifications haven't changed. I think the challenge is for other vendors where I think we've excelled. We've always taken a fully engineered approach to producing the product. So we look at the specifications and develop the systems backwards. So I wouldn't say that when I look at what we do for other people, it's not any more challenging, but it is challenging. But I think that's also been the root of our successes, because we've been able to engineer that product to meet their specifications and specifications for other customers, and do it consistently in very, very large volumes, which is the biggest challenge is the volumes that they require on a consistent basis.
So Tom, our audience, our membership, there's crazy premiums for American Silver Eagles right now. People are paying above $30 an ounce, whereas the spot price of silver is right around 20, 21 right now. I think some American Silver Eagles are in the mid to high 30s even, which is crazy. Almost 100% premiums over spot out there on the market. So the Mint, in their reports that we see of how many millions of ounces are being produced per month, they're well below their peak, right? They clearly have the manufacturing capacity to produce millions more per month than what they are currently producing. And why don't they just place bigger orders with you? If the demand's clearly there,
right?
Are you capacity constrained? Are you maxed out, or you just don't want to produce more? Or where's the bottleneck in this process? Why isn't the Mint producing 5 million ounces more per month when the demand's clearly there?
I'd say the easy answer is all of the above. So let's talk about what really has transpired over the last 2.5, 3 years, and it truly is COVID related, right? So we were very fortunate that when COVID struck, I think back to March 12th, 2020, we were just catching our strides, supplying again to the U.S. government. COVID hits, and there's this huge uncertainty around the world as to what in the world, what's going on here. We immediately got a call from the Department of Treasury and said, because of our position in the supply chain to the Federal Reserve banking system, we're considered an essential service. So we were given the green light to stay in operation. But staying in operation and maintaining operations during COVID are two different things, because you had people that were afraid to come to work. You had a lot of people, we've experienced it. I know that not just the U.S. Mint, but other customers have experienced it that were at the end of their tenure, that it just pushed them into retirement. So now all of a sudden you've got supply issues. Now you've got manpower issues. You have to factor that there was probably 2.5 million people left the workforce as a result of COVID. and there isn't. We were already facing labor shortages prior to COVID. This has just exacerbated the problem now, because now people don't want to work, or they don't have to work, or some of the handouts and things like that happened. We're starting to see that ease a little bit, but it's still a challenge. Like between our two facilities, between Idaho and Henderson, I'm short 75 people.
Well, I think he answered it, but just to reiterate, Tom, I mean, basically input output. I mean, the mint can only mint what they have as an input. It looks like the input's been decreased across the board, and you were not a sole supplier. So my apologies. I thought at one time you were. Regardless, you can only produce what you have on shelves. And if you don't have the manpower and you have the product, you're going to be, less. And if you have the capacity, but you don't have the blanks, you're going to have less output. So can you simplify that a bit?
Yeah, and I think the other challenge too is, to your point, like we've certainly for the last 2 decades been the primary supplier to the U.S. Mint, and there's been other suppliers kind of come in and out. To bring on, everybody says, well, just go get more suppliers. It's not that easy. They have to have the equipment set up to handle not just the quantity, but the quality of the product. And then you think about somebody that may have to invest 10, 15, $20 million into new equipment to do that. They're going to look for assurances, and the U.S. government's contract is not built on giving any assurances. So it puts a new contractor, a new supplier in the point of, where's the quid pro quo? You want this from me. What do I get from you? There's nothing. There is no guarantees. So, I think I know the other vendor in particular that is supplying. They started small and they built some capacity over the years, but I think they're probably at the same point. How much deeper do you go, knowing that there's no long-term guarantees? How much more of an investment do you make, knowing there's no long-term guarantees? And I know for a fact they're finding that they're suffering the same manpower issues that everybody is. So I think everybody around the world, and I can speak to myself, if I look at our top 10 customers that we supply to, I could easily be supplying double to every single one of them. But because of our constraints, that's just not realistic right at this point.
Where do you get your silver from? Direct from refineries, or do you buy 1,000-ounce bars from the COMEX or vaults, or from bullion banks? Who's your source of silver?
So we generally deal through brokers. We don't have any contracts with any refineries. For us in particular, we only accept 1,000-ounce good delivery bars. Primarily now customers are asking for LBMA, qualified product. And we do both 3.9s and 4.9s. So, we get multiple, it can come in from multiple sources, but specific to the U.S. Mint, they have an approved list of silver hallmarks that they will accept. Right. So so right now the U.S. Mint supplies their own silver. For a number of years, we were actually helping them procure it. Now they're procuring it themselves, like they do with the gold. And I think that helps because of their hedging systems that they have and things like that. It just made it easier for them. But no, so we don't deal directly with any of the refineries. It's all through brokers, secondaries. I have to be honest with you, given the volumes of silver that we produce, because between my two facilities, we make and ship between 5.5 and 6 million ounces of silver a month.
That's a lot of silver.
There's no single refinery that could supply all that silver to us. So that's why we have to go to brokers and get it.
Makes sense.
Well, 5.5, 6 million ounces, that's what, 60, 70, 80 million, and 75 million ounces a year. So you're basically processing 10% of global mining supply in the form of, the mines only produce 800 million ounces a year, and you're doing about 10% of that in the form of coins and other products.
And you have to think about it, that's only in ounces of finished product. We need pipeline to be able to produce that product. So generally we have probably 3 to 4 times that amount of silver on site helping to process that. So
no, I'm just trying to think through that. If global and the investment demand is probably 250 to 300 million ounces a year of that 800 million. So you're like a huge piece of that 300 million ounces a year that's probably going to, 200 to 300 million ounces a year that investors are doing, you're a huge piece of that globally, probably on the order of, I don't know, 20, 30. I'm just paper napkin math in my head right now, but I would guess 20 to 30% of the market probably goes through 20 to 30% of the investment silver market probably goes through one of your facilities.
That's wild.
Before it gets to an end customer. Would that be a fair?
That's probably a fair
guess.
That's a fair assessment.
Yeah. So
That's
hey,
incredible.
we've got the man right here on Wall Street Silver. Thank you, David.
What are you stacking, Tom? You doing monster boxes?
Do you stack yourself, or it's like, fuck, I already got the whole warehouse?
He's like, I'll put it in my warehouse.
You got to see it. I've been there.
He says, my vault for stuff just running through. I don't need it. I don't need to store anything in my backyard, right?
My facility, our facility in Henderson is 142,000 square feet, so that's our vault right there.
Yeah.
Jeez.
I want a follow-up question, Tom. Back to the mint situation. Do you see this alleviating in the future, or is this kind of the standard operating process going forward?
Yeah, that's a good question.
I think so. Let me talk to us in particular. We're now waiting on equipment that we've ordered some of it over 18 months ago to arrive, and we're starting to now see bits of it trickle in. I think we will be able to start supplying more over the next 12 months.
Mm-hmm.
So, and I think what really what it was going to be interesting to see is what the effects of these midterm elections is going to be on the demand as well too. Right. Because I think, as you said earlier, volatility is very good for our business, right? When silver and gold prices start to flatline, people lose interest. So it'll be interesting to see what the pushback is on the results of the midterm elections on because a lot of people were anticipating that if there was a GOP sweep on both the House and the Senate, it may have some negative impacts on the demand for precious metals.
Right.
If they split the House and the Senate, that still means there's going to be turmoil. Either way, there's going to be turmoil. And it's always the demand for silver eagles and things like that is always strong coming into an election year. I've tracked it back historically for 32 years, and you can certainly see the cycles.
Really?
So I think the demand is going to continue strong, regardless of what happened. We're going to be able to start producing more over the next 12 months. But again, it's not solely going to be for one customer. We're going to look at that and kind of divvy that out to all of our customers. So, you'll see each, we look at doing incremental increases to our customer base, kind of equally. No different than the U.S. Mint sells on allocation. We do the same thing. We sell on allocation when we're up against 100% capacity.
So, Tom, when you're producing silver products for different customers, who actually owns the silver? I mean, when the silver comes into your warehouse, are you buying it? Are you taking any sort of risk in terms of silver is going to go up or down while it's in your warehouse, or who actually owns the silver during the process?
For our customers, they own the silver. So they, in a lot of cases, they have the relationships with the silver distributors or gold distributors. They're the ones that do the hedging and things like that. We're just a manufacturer. So we've always held the business model, we don't get into derivatives. We don't do any forward buys. We don't do any hedging. They consign the product to us. We manufacture it and ship it back. It never shows up on our balance sheet. It's not an asset that we own, so we don't do anything funky. Like I know some other people have gotten in trouble in the past where they borrow against the value of all the precious metals they have. We completely avoid that. So it's a very clean transaction for our customers. And we do that again to avoid any price risk on our part, because we are a manufacturer. Mm-hmm. Generally, when you look at what the dealer brokers charge for this product compared to what we charge for the product, our margins are so slim. There is just zero room for us to be able to take on any of that risk. Mm-hmm. So that risk is really held by our customers. And that way it allows us to maintain our very slim margin, because again, for us, profit is not a four-letter word. It's profit is a sign of sustainability, so that we can be here next year and the year after and the year after to supply a product. But maintaining profitability is a different thing. We don't really change our prices toward the customers. Like I know another hot topic that everybody talks about is these premiums and things like that. again, it's economics, it's supply and demand. The U.S. Mint doesn't change their price that they charge their authorized dealers. I know other customers maintain the price. The price impact happens at the dealer level, right? So it's not the manufacturers, it's not the mints, it's at the dealer level that this crazy premiums happen, right? And good for them. If they can get it, they can get it. That's wonderful.
But, yeah, it's my understanding a lot of the dealers, and you've seen this on some of their websites, they're willing to, for American Silver Eagles as just one example, they're willing to pay $30 to $32 an ounce if people want to sell to a bullion dealer because they're having so much trouble getting these things.
I'll tell you a crazy situation happened about a decade ago, I think, we had this cycle where there was a huge demand, and we had a customer call us and actually offered to pay $40 for a 1 ounce bar, or for a 100 ounce bar. So it was $4 an ounce for a 1,000 ounce bar. Right. And I had my salespeople came to me and said, well, what should we do? I said, well, stop making that other crap and just sell that 1,000 ounce bars. It's just like, but we don't do it. That's not the nature of our business. But when the demand gets that, people ask stupid, ridiculous premiums for, and they're willing to pay it. And I've heard an interesting thing that said, when you look at, you hear the stories about the suppressed price of silver, and there's market manipulation and all those things. The story really goes is that when you look at what people are prepared to pay through the dealer brokers for a Silver Eagle, that truly represents the true price of what silver should be.
Yeah,
I totally agree.
So, last question. Can I get a tour when I'm in Idaho? Or one of your
You got to sign an NDA.
I'll sign whatever you want.
An NDA.
I'll give you one of my kids. Can I have a tour?
That's normally, we ask that for the second tour.
Nice. Okay, good.
Well, I mean, I'll probably be in the area in September of next year, so I'd love to do a tour if we could arrange something. And
well, we're not going anywhere. We still, like David said, we still have our facility in Coeur d'Alene, Idaho, and we have our new facility in Henderson, Nevada. We actually still have a facility in Shanghai, China.
Oh, really?
Has survived through COVID. We're supplying some of our European customers through our Chinese operation. Surprisingly, they make it's not surprising. They make a very, very good quality product. We're able to get very good quality silver through Hong Kong into China. It's been challenging, obviously with the political situation, it's very challenging over there, but we're still able to supply from there. But
are you the source for the panda coins also, the Chinese pandas? Or
no, we're not. No, that's one that the Chinese government likes to do themselves. The Chinese government is very similar to the U.S. Mint. They have 4 facilities, just like the U.S. Mint has 4 facilities.
Interesting.
They each kind of do their own little things, so it's very interesting how they kind of mimic each other, that way, in the way that they do things.
Well, Tom, thank you so much for joining us and explaining what's going on with the American Silver Eagle market in particular, because I know that's a hot topic with a lot of our audience. And I mean, you're the source. I mean, so we can't get a better source than you for what's going on with that market. We appreciate it.
Pleasure. No, my pleasure. And anytime that I can try to help dispel some myths or shed some light on what's happening from the supply side anyways, I'm happy to do that.
Thank you, David, too, for bringing Tom on. Really appreciate it.